Hi there, you're watching Dukascopy TV. I'm Ben Jones. It's the start of another trading week, so it's time for another edition of The Week Ahead. Joining me on the line to discuss some of the key events that may shake up the market this week is Magnus Alvesson from Swedbank. So to begin with, Magnus, we will see Janet Yellen speak on Tuesday. In your opinion, what will be the key topics that she will cover?
Well, this will be her first speech as the governor of the Federal Reserve. So we obviously will be very interesting to see where she puts the emphasis on in this speech. I mean, the obvious areas that we are looking at is how she views the recent economic development in the United States. We've seen the labor market not performing as well as some people would have hoped to. In particular, the payroll, the non-farm payroll data that came in on Friday was lower than expected. On the other hand, unemployment rate is falling, and it's actually getting closer to the predefined threshold that the Federal Reserve has set for to start increasing the Fed's fund rate. So she will have to respond to that in some way, and I suspect that she will tone down the importance of this threshold and probably point at other data in the U.S. economy that is coming in and to some extent providing support that the economy is going forward, but not too fast. So essentially, I think she will confirm the line that her predecessor, Ben Bernanke, has put and continue with the tapering until the third quarter of this year.
Now, early Wednesday morning, we have Chinese trade balance data released. The growth in China has been slowing recently, and many are saying that the days of double-digit GDP growth are over. Last month, the trade balance figures were lower than forecast. So what does it mean for China if they continue to fall? And on the contrary, what will the effect be if we see them substantially go up?
Well, I mean, to start with China, I mean, the new government there and the new president has clearly signaled that they are aiming to change the growth model. They want to rely more on consumption, less on investment and trade. For that reason, I mean, what we're seeing in terms of data is that we are expecting a slowdown. In our latest forecast for the Chinese economy, we expect the growth for 2014 to come in slightly below 7%, which is significantly lower than what we've been used to seeing from the Chinese economy, which is closer to 8-9% of growth. For China, I think they will be able to handle this. They have pretty large cushions in the economy, so they can take care of possible loan defaults that could come in the semi-private sector, semi-public sector. So for the Chinese government and Chinese officials, this, I believe, is what they are counting on. I think more seriously would be the impact on the rest of the world, and particularly the impact on other emerging economies that are dependent on Chinese trade. That is mainly raw material exporting countries such as Brazil, but also more developed countries like Australia. They will see the impact from the slowdown in Chinese growth, and we'll probably see the effect come in and slower growth rates in their countries, but also pressures on exchange rates and interest rates in connection with that.
And finally, we also have on Wednesday the Bank of England inflation report and Governor Carney's speech. Now, the big discussion at the moment is the unemployment rate is getting ever closer to that 7% threshold where the Bank of England said they would consider hiking rates. Their initial forecast to reach this figure was in 2016. So how important is this data release, and what do you expect Governor Carney to say with regards to this threshold?
Well, I mean, the interesting part with this speech and the data is how he's going to deal with the threshold and how he will guide the market in viewing the monetary policy going forward. He, along with the Federal Reserve in the United States, have put quite a lot of emphasis on this future, the guidance of the future policy rate. But given that these threshold levels are now getting close, the value of that guidance is rapidly eroding. So they will have to find a new way to communicate to the outside world of their intention. I don't think that the unemployment rate getting closer to threshold will trigger any policy changes in the short run. The UK economy is still far below what it was prior to the financial crisis, and there's still significant slack in the UK economy. That said, I think that the UK economy is doing better than, actually the reason for the unemployment rate falling in the UK is for better reasons than in the United States. In the UK, we are actually seeing a prolonged period of growth in employment, while in the United States we saw a fall back in the participatory rate in the labour market. So from that point of view, the momentum in the UK economy is quite strong. But I think he will be quite keen on emphasizing that the monetary policy will continue to be expansionary, and that we're still some way off from seeing a first hike in the policy rate from the Bank of England.
Magnus, thank you very much for talking to us today. That is all for this edition of The Week Ahead. Stay tuned to Dukascopy TV though, as Durham McDermott will be bringing you this week's first edition of Forecasts. Goodbye.